welcoming you to this video on goods and services tax. Though GST is a wide concept, let us share some of the important aspects of GST. Taxation is one of the essential and decisive elements in the working mechanism of a nation. The revenue collected in the form of tax is used for providing various services to the public, such as infrastructure, transportation, sanitation, and other amenities by the government of a country. There are two types of taxes levied in India. Direct tax is levied directly on income, profession, etc. of an individual, and where the tax burden cannot be passed on to any other person. Indirect tax, on the other hand, is not paid on direct income of an individual but is levied indirectly on the ultimate consumers of goods and services. Hence, the former is levied on the income which the latter is levied on goods and services. In indirect tax, the immediate burden is on one person and the ultimate burden is on another person, that is, the person who ultimately consumes. GST was rolled out in India from 1st July 2017. GST is one of the greatest tax reforms held in India. With the introduction of GST, India has joined the club of developed and progressing nations, which are already having a common tax on goods and services. GST Council. Article 279A was inserted by the Constitution Amendment Act 2016, that is 101st Amendment. The President shall, within 60 days from the date of commencement of 101st Amendment, constitute a council. Union Finance Minister is the chairperson. Union Minister of State, Revenue or Finance, Minister in charge of Finance or Taxation nominated by each state government. These members choose one amongst themselves to be the vice chairperson of the council. Goods and Services Tax Council shall make recommendations to the Union and the state on the following aspects: taxes, cesses, and surcharges levied by the Union, the states, and the local bodies which may be subsumed in goods and services tax. The goods and services that may be subjected to and exempted from goods and services tax. The threshold limit of turnover below which goods and services may be exempted from goods and services tax. The rates including floor rates. Any special rates for a specified period to raise additional resources during the natural calamity or disaster. Goods and Services Tax Council shall recommend the date on which GST be levied on petroleum, crude, high-speed diesel, natural gas, aviation turbine fuel. One half of the total number of members of the GST Council shall constitute the quorum of the meeting. Every decision of GST Council shall be taken at a meeting by a majority of not less than 3/4 of the weighted votes of the members present. The GST Council shall establish a mechanism to adjudicate a dispute between the Government of India and one or more states, or between two or more states. Compensation to states for deficit in the following: the tax collections. The Parliament shall, by law, provide for compensation to the states for loss of revenue arising on account of implementation of the GST for a period of 3 years. Parliament has passed the law to compensate states For revenue deficit, the act is GST Compensation to States Act 2017. Under this act, additional tax is collected as GST compensation cess on specified goods, and the amount is distributed amongst those states incurring revenue loss due to the introduction of GST. Administration of indirect taxation in India. India is a federal country where both the central and the states have been assigned the power to levy and collect taxes through respective legislations. To empower the center and the states to levy and collect the GST, legislations were approved by the President, which includes the Central GST Act 2017, the Integrated GST Act 2017, the GST Compensation to States Act 2017, the Union Territory GST Act 2017, and the State GST Act 2017. Taxable event. The crux of any taxation system is the incidence, that is, the point at which the liability to charge tax arises, and that event is referred as taxable event. The taxable event in GST is the supply of goods or services rather than sale, manufacture, production of goods and provisions of services. Concept of supply. Supply is the taxable event under GST. The term supply is characterized by the following features. Supply should be of goods or services. Anything which is not goods or services is not supply. Only movable property is considered as goods. Supply should be for consideration. Supply includes flow of money from a third party on behalf of the receiver. Supply should be made in the course of business. Supply should be made by a taxable person. Supply should be between non-taxable parties, is not leviable to GST. Supply could be made to a non-taxable person. Taxable person is one who is registered or who is liable to be registered under the GST. Schedule 1. There are a few transactions which, even without consideration, are considered as supply, also known as deemed supplies as specified in Schedule 1. Schedule 2 lists transactions which are to be treated as supply of goods or supply of services. Schedule 3 lists down the few activities which are specifically not to be considered as supply. With these concepts, hope the viewers are able to follow the GST concept to some extent. Thanking you all.